What's going on, guys? It's Tickers and Tokens here, back with another video. And in today's video, guys, I wanted to talk to you about the upcoming earnings schedule. If you take a look and scroll through, we actually got Netflix on here. I'll talk about that one in a minute. But if you notice that most of them are actually financials, you got United, Community Bancorps, all the Bancorps. You got a few healthcare companies in there, Hasbro. Overwhelmingly, though, it's healthcare and financials. And one of the biggest ones to watch this week is Bank of America. Then going into the earnings, it follows J.P. Morgan and Wells Fargo. They released theirs last week and mostly beat the expectations, but earnings still declined, mostly due to increased provision for credit losses and weaknesses in investment banking. Yeah, that's across the whole sector. I would imagine you'd probably see the same thing in Bank of America. But you're ahead of earnings. The premiums on the options contracts are going to be trading very, very inflated. So make sure you have a plan and make sure you analyze what's being priced into the underlying stock and what's being expected when you're going to make these trades with options, buying puts or calls. Uh, Make sure you're careful around earnings because implied volatility can really hurt you. Going into Netflix's earnings, though, we want to come back to Netflix. Wall Street thinks the focus on ads may outweigh subscriber ads. According to this Wall Street analyst, they think that Netflix's earnings will actually be better this time than usual. There's been a lot of downside to Netflix over the past couple of days or so. Just past couple months, honestly. They've started losing millions and millions of subscribers, and we all know that they cost a lot of money to do their Netflix originals and stuff like that. And they've been hemorrhaging money quite a bit and not really earning as much as they used to. Right now, the stock's trading for around a PE of around 20. That's a pretty low PE for a big cap tech stock like this. I'd like to get it a little lower. It's sitting at around the $200 range right now. I'd like to get it at around 175 for my long term if I was going to get back into Netflix. I'm not in Netflix. I just want to go ahead and disclose that. But if I wanted to get back in, I'd probably be around like the 180, 175 mark. Maybe if it comes back down to 150, I might actually load the bag on it. Earlier this year, Netflix had said it would introduce a lower-priced service tier with ads in early 2023, but the launch then became widely expected to happen before year's end, and on October 13th, the streamer confirmed a November launch, ahead of the start on an ad-supported version of Disney+. So they're just copying pretty much every other subscription-based service does, man. They all have you pay up front, and they all offer ads in some way, shape, or form. Netflix was kind of exclusive in that, unique in that they charged you quite a bit, but you would get no ads on top of it. So you were paying for that extra, view time. And it can be annoying when ads pop up, if you all know, because especially when you're looking through these articles, they pop up, like this one down here. Pop-up ads are annoying, but I guess they work. Netflix, which reported in July, had a total of 220 million subscribers, down from 970,000 in the first quarter. As forecasted, it will add 1 million subscribers when it discloses Q3 earnings on October 18th. Year to date, Netflix stock is down about 60% from its first day of trading this year and sits at around 230. Okay, so it's actually sitting at around 230 at the time of this article. If I just looked at it on Google Finance, I'd remember it being down closer to 200. Somewhere, I know it's close to where Tesla is as well. And that's another one. Tesla's also one to watch this week. They're reporting their Q3 earnings this week, and if you remember their last earnings, they actually ever so slightly missed. Well, not even earnings. Sorry, they announced that their deliveries came in slightly under expectations. They delivered like 340,000 cars versus like 350 or 60 something expected. It was a very, very slight miss, but it sent the stock just tumbling, man. Like it's so easy to spook Wall Street these days, man. They're scared of their own shadow. They're scared of cars. They're scared of banks. They're scared of stocks. They're scared of crypto. They're scared of everything, man. Why are you running? What you scared of? They ain't gonna hurt you. Tesla currently carries a Zacks rank of 3. whatever that means. Zacks consensus estimate for Genuine Parts to be reported quarters earnings and revenues is pegged to $2 per share and $5.39 billion, respectively. Everybody's giving it everybody thinks it's gonna have decent earnings, it looks like. We'll have to wait and see. Also, again, the premiums on, I ain't even gotta tell you if you're a trader, you already know the premiums on Tesla are gonna be insane. Yeah, they always are. They're high on a normal day, never mind on earnings day. This is a company to watch always. This is a big sentiment play for the market too. If you see Tesla drop off in any big way, you better believe the rest of the market's going to go down with it. Just keep in mind, guys, we do have a lot of big earnings this week. Make sure that if you are planning any kind of trades, that you kind of weigh how volatile the stock is versus what's going to be implied move and then what it actually ends up doing. Because there'll be a lot of IV crush. I feel like a lot of these stocks have already been destroyed, really, really destroyed. And I don't think earnings is going to move them too much, if to the downside at least. There's more surprise to the upside than there is to the downside in this market right now. We have the market sold off about 5%, something like that. Just on Friday alone. I think we have a potential to gap back up. Let's actually bring up the SPY chart so we can get a good idea of what to expect. Let's take a look. S&P 500. Yeah, it was down. Sorry, I misspoke. It was down 2.5%. Just about. Just on Friday. It just slowly selling off, man. Down below 357. Breaking June lows again. But yeah, I think it has potential though to get back up here. You could see if we get some positive momentum out of these earnings, we could see SPY rally all the way back up at 370 right here. You can see there's actually a bit of buying coming in right here. You're starting to see a retest to come back to whatever this support level is right here, 360. Come back to 360. I'd say if we break above it, we'll see a rally all the way back up to 370 most likely. So keep your eye on 365. Get ready for 370 if we go up that high. If not, it'll retest there. It'll come right back down and maybe keep coming down even further. I don't think we've seen the bottom on the SPY. We got the bottom for now, but I think in a few months' time, I think the SPY will be lower. The market will crash before we get into the worst of this recession. You still got all these interest rate hikes and inflation fears out there in the market. So all in all, it's a bearish picture. But keep your head up, stay strong, guys. It'll improve in time. Just keep doing what you're doing. If you're dollar cost averaging the good stocks, the good crypto, you'll make it out in the long run. Everything will be okay. Just want to remind you guys that market is not your friend, but it's a great tool to have in your pocket. So that's all I got for you guys in today's video. Please like and subscribe if you enjoyed the video. Leave anything down in the comments you guys might want to see in the future as far as the video is concerned. This has been Tickers and Tokens, signing off. Peace.